Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourself. Please subscribe the channel and also please do like and share and let me know in the comment section with your observation. Today I am going to discuss about Public Provident Fund account PPF account. Public Provident Fund is one of the oldest small saving scheme of Government of India which is a saving cum tax saving instrument and is very popular. Government of India via Government Gazette Notification GSR number 915E dated 12 December 2019 has launched new scheme Public Provident Fund Scheme 2019 with effect from 12 December 2019. Salient features of PPF account. The scheme is for 15 years, extension of 5 years for any number of times. Public Provident Fund interest rate is fixed quarterly by Government of India. The account may be transferred anywhere in India and from bank or post office to other bank or post office. Opening of account. An individual may open an account by making an application. An individual may also open one account on behalf of each minor or a person of unsound mind of whom he is the guardian, provided that only one account shall be opened in the name of a minor or a person of unsound mind by any of the guardian. Provided further that the guardian as well as the minor or a person of unsound mind shall be the resident citizen of India. Joint accounts shall not be opened under this scheme. NRI and HUF are not eligible to open PPF account. PAN is mandatory along with officially valid documents required for KYC for identity and address proof. Proof of age of minor in case of account opened by minor or on behalf of a minor. A certificate from Superintendent of Mental Hospital where a person of unsound mind is confined or treated as the case may be, in case the account is opened on behalf of the person of unsound mind. In case of an account opened on behalf of a minor or a person of unsound mind, the identity documents of the guardian shall be furnished to the bank. Deposits in the account. Deposits can be made by cash or clearing or transfer or through online. In case of deposit by means of a check, the date of realization of the check shall be the date of deposit. Where the deposit is made by means of an outstanding check or instrument, collection charges as applicable shall be payable by the depositor on actual basis, either by debit to the savings account of the depositor or in cash against a proper receipt. Deposit which shall not be less than 500 rupees and not more than 1,50,000 rupees in multiple of 50 rupees may be made in an account in a financial year in one lump sum or in installments. Maximum limit of 1,50,000 rupees by an individual shall be inclusive of the deposits made in his or her own account and in the account opened on behalf of the minor. Discontinuation of account. Any account in which the account holder, having deposited 500 rupees in the initial year, fails to deposit the minimum amount in the following years shall be treated as discontinued. An account treated as discontinued may be revived during its maturity period on payment of a fee of 50 rupees along with arrears of minimum deposit of 500 rupees for each year of default, provided that the balance in a discontinued account not revived by the account holder before its maturity shall continue to earn interest at the rate applicable to the scheme from time to time. The account holder of a discontinued account shall not be eligible to open a new account before closure of such discontinued account after maturity, provided that the facility of loan and partial withdrawal shall not be allowed in such an account and the account holder shall be prohibited from opening another account in his or her name under this scheme till final closure of such account. Facility of loan and partial withdrawal shall be allowed to regular accounts only as per the provisions of this scheme. Total deposit in a year shall be inclusive of deposits made in respect of years of default of the preceding years by excluding the default fee. Loans. At any time after the expiry of 1 year from the end of the year in which the initial subscription was made, but before expiry of 5 years from the end of the year in which the initial subscription was made, the account holder may apply to the bank for obtaining a loan consisting of a sum of whole rupees not exceeding 25% of the amount that stood to his or her credit at the end of the second year immediately preceding the year in which the loan is applied for. In case of an account open on behalf of a minor or a person of unsound mind, the guardian may apply for the loan for the benefit of the minor or the person of unsound mind by submitting the following certificate to the bank, namely, certificate that the amount sought to be withdrawn is required for the use and welfare of Sri or Srimati or Master or Kumari, who is a minor or a person of unsound mind or a person incapable of operating his or her account due to physical infirmity and is alive on this the day of the month and year. An account holder shall not be entitled to get a fresh loan so long as earlier loan has not been repaid in full together with interest thereon. An account holder shall be entitled for only one loan in a year. Repayment of loan and interest. The principal amount of a loan shall be repaid by the account holder before the expiry of 36 months from the first day of the month following the month in which the loan is sanctioned, provided that the repayment may be made either in one lump sum or in installments. After the principal amount of the loan is fully repaid, the account holder shall pay interest thereon in not more than 2 monthly installments at the rate of 1% per annum of the principal for the period commencing from the first day of the month following the month in which the loan is drawn up to the last day of the month in which the last installment of the loan is repaid, provided that where the loan is not repaid or is repaid only in part within a period of 36 months, interest on the amount of loan outstanding shall be charged at 6% per annum instead of at 1% per annum with effect from the first day of the month following the month in which the loan was obtained, the last day of the month in which the loan is finally repaid. The interest on the amount of loan outstanding under the proviso and any portion of interest payable but not paid on any loan, the principal amount of which has already been repaid within the period of 36 months, may on becoming due be debited to the holder's account. The interest recoverable shall accrue to the central government. The interest on outstanding loans which are not paid before the expiry of 36 months or paid partly shall be debited to the holder's account at the end of each year. In case of death of the account holder, the nominee or legal heir shall be liable to pay interest on the loan availed by the account holder but not repaid before his or her death. Such amount of due interest shall be adjusted at the time of final closure of the account. Withdrawal from account. Any time after the expiry of 5 years from the end of the year in which the account was opened, the account holder may avail withdrawal by applying from the balance to his or her credit an amount not exceeding 50% of the amount for minor also that stood to his or her credit at the end of the fourth year immediately preceding the year of withdrawal or at the end of the preceding year, whichever is lower, provided that the amount of loan outstanding, if any, along with interest, shall be paid by the account holder before availing the facility of withdrawal. Provided further that the facility of withdrawal may be availed only once in a year, only from the accounts which have not become discontinued. In case of an account opened on behalf of a minor or a person of unsound mind, the guardian may apply for the withdrawal for the benefit of the minor or a person of unsound mind by submitting the following certificate to the bank, namely certified that the amount sought to be withdrawn is required for the use and welfare of Sri oblique Srimati or Master or Kumari, who is a minor or a person of unsound mind or a person incapable of operating his or her account due to physical infirmity and is alive on this day of the month and year. Closure of account or continuation of account without deposits after maturity. Any time after the expiry of 15 years from the end of the year in which the account was opened, the account holder may apply to the bank for the closure of his or her account. The bank shall allow the withdrawal of the entire balance along with due interest up to the last day of the month preceding the month in which the account is closed. The account holder may retain his or her account after maturity without making any further deposits for any period and the balance in the account will continue to earn interest at the rate applicable to the scheme, provided that the account holder may make one withdrawal in each year of any amount within the balance. Once the account is continued without deposits for more than a year, the account holder shall not have the option again to continue the account with deposits. Extension of account with deposits after maturity. The account holder on the expiry of 15 years from the end of the year in which the account was opened may extend his or her account and continue to make deposit for a further block period of 5 years by applying to the bank. The option of extension of account shall be made by the account holder before expiry of 1 year from the maturity of the account, provided that an account opened on behalf of a minor or a person of unsound mind may be extended at the request of the guardian. No deposits can be made in the account if the account holder fails to give his or her option to continue the account within 1 year from the date of maturity. Any deposit made in such account without extension of the account shall be treated as irregular and refunded by the bank immediately without any interest, provided that the balance in the account on the date of maturity shall continue to earn interest up to the end of the month preceding the month of closure. Facility of partial withdrawal of the scheme shall be available to the account extended subject to the condition that the total withdrawal during the block period of 5 years shall not exceed 60% of the balance at credit at the commencement of the block period, provided that the withdrawal, subject to the ceiling as specified above, may be made either in a single or in yearly installments. Provisions shall also apply on accounts after maturity on expiry of the each extended block period of 5 years. If the account is continued with deposits for one or more 5 block periods, the account holder may leave the account without deposits on completion of any block period, and the account shall continue to earn interest till it is closed, and the account holder may make one withdrawal every year from the account. An account holder who has given his or her option for the extension of the account for a period of 5 years shall not have the option to withdraw his or her request at a later stage. Premature closure of account. An account holder shall be allowed premature closure of his or her account or the account of a minor or a person of unsound mind of whom is the guardian of an application to the bank on any of the following grounds, namely treatment of life-threatening disease of the account holder, his or her spouse or dependent children or parents, on production of supporting documents and medical reports confirming such disease from treating medical authority. Higher education of the account holder or dependent children on production of documents and fee bills in confirmation of admission in a recognized institution of higher education in India or abroad. On change in residency status of the account holder on production of copy of passport and visa or income tax return. The rule shall not apply for the PPF account opened before 12 December 2019, provided that an account under this scheme shall not be closed before the expiry of 5 years from the end of the year in which the account was opened. Provided further that on such premature closure, interest in the account shall be allowed at a rate which shall be lower by 1% than the rate at which interest has been credited in the account from time to time since the date of opening of the account or the date of extension of the account as the case may be. Nomination. Nomination is mandatory. A depositor in a PPF account shall compulsorily nominate one or more individuals as nominee, but not exceeding 4 individuals, who, in the event of the death of the depositor, shall be entitled to receive the eligible balance. Where the nominee is a minor, the depositors making the nomination by furnishing the necessary particulars shall appoint an individual to receive payment of the eligible balance in the event of the death of the depositor during the minority of the nominee. The nomination may be varied by the depositors by making a fresh application together with the passbook to the bank any time before the maturity of the account. In case of accounts except those in the name of a minor or a person of unsound mind opened before the 1st April 2018 and where no nomination has been made, the depositor shall do so immediately and in any case before the maturity of the account. In case of an account opened by a minor or on behalf of a minor or a person of unsound mind, as the case may be, the nomination shall be made by the guardian, who may nominate any individual, including himself, in this regard, provided that in respect of such accounts opened before the 1st April 2018, no nomination shall be allowed, and in the event of the death of the depositor, the eligible amount shall be paid to the guardian. The thumb impression of an illiterate depositor at the time of making nomination or altering the nomination shall be attested by two witnesses. No witness shall be required in case of a literate depositor for the purpose. At the time of opening of account, nomination cannot be made in favor of NRI. Nominee cannot continue the account or make partial withdrawal after the death of depositor. Closure of account on death of the account holder. In the event of the death of the account holder, the account shall be closed and the nominee or the legal heir shall not be allowed to continue the account. The balance in the account of the deceased account holder shall earn interest in the end of the month preceding the month in which the eligible balance is paid to the nominee or the legal heir as the case may be. In the event of death of the depositor, the eligible balance in the account shall be payable as per a specified rule. If a nomination is in force at the time of death of the depositor, the nominee may make an application to the bank for payment of the eligible balance, and the application shall be accompanied by the proof of death of the depositor. Where any other nominee has also died, the proof of death of such nominee. If there are two or more surviving nominees, the eligible balance shall be paid in the proportion as specified by the depositor while making the nomination, and if no such proportion or share is specified, then in equal proportion to all the surviving nominees. If any nominee dies, his or her specified share in the eligible balance shall be distributed among the surviving nominees in the same proportion as their specified shares. Where the surviving nominee is a minor, the payment shall be made to a person appointed by the depositor to receive such payment, and if no such person has been appointed, to the guardian of the minor. If a depositor dies and there is no nomination in force at the time of his or her death, and probate of his or her will or letters of administration of his or her estate or a succession certificate as granted in the Indian Succession Act 1925 is not produced within 6 months from the date of the depositor to the authorized officer of the bank where the account stands, then if the eligible amount in the account does not exceed rupees 5 lakh, the authorized officer of the bank or the authority specified by the institution to which the bank belongs may pay the same to any person appearing to him as the rightful claimant and to his or her satisfaction to be entitled to receive the amount or to administer the estate of the deceased on an application accompanied by the following documents, namely death certificate, passbook or deposit receipt or statement of account in original, affidavit, letter of disclaimer, bond of indemnity. If the eligible amount in a decreased account is above rupees 5 lakh, the amount shall be paid by the bank to the claimant on submission of succession certificate issued by the court along with the following documents, namely claim form, passbook or deposit receipt or statement of account in original, death certificate of the account holder. Tax benefits. Subscription in PPF account qualify for tax rebate under Section 80C of Income Tax Act. Interest accrued in PPF account and withdrawals thereof are fully exempt under Section 10(11) of Income Tax Act. Balance held in PPF account is also exempt from wealth tax. Recovery of excess amount paid. Any amount not due but erroneously paid to a depositor, guardian, nominee, or any other person authorized by the depositor shall be recoverable by the government in the same manner as the areas of land revenue from such depositor, guardian, nominee, or any other authorized person as the case may be. Change of surname. The Ministry of Finance has via its letter number F317 PD/91 dated 30th December 1982 clarified that a change in the surname of a woman after marriage is not unusual. There would be no objection to deposit offices acceding to such request from a female public provident fund subscriber in the event of her marriage on the basis of documentary evidence or application submitted by her. Protection of credit balance from attachment. Amount standing to the credit of any account holder shall not be liable to attachment under any order or decree of any court in respect of any debt or liability incurred by the account holder. Rates of interest payable in PPF account as notified by government for different periods. Thank you.